All right, what's going on, everybody? Today's analysis is about a top-down breakdown of what I see guiding the crypto markets. What are some correlations that we need to be paying attention to? Altcoins that you definitely want to keep your eye on, and why I am still long in the crypto market and why I believe that the next few months we will still see bullish price action. So first thing I want to talk about is crypto as an asset class is still guided by the larger dominant US equity markets, as well as the macro forces such as the dollar, as well as bond markets around the world, specifically the US bond markets. More importantly, the 10-year treasury notes, as well as the 30-year and the 5-year treasury notes. So the 10-year probably being the most important because it is one of the largest traded notes, especially from the Fed. And this is one of the leading causes of markets either adopting a risk on or risk off mentality. And as of right now, we know for the last few months that the markets have been in a generally cautious risk off mentality, especially when it comes to tech and growth stocks, as well as crypto. So let's dive into it. First thing I want to talk about is, first of all, knowing correlations. Correlations are nothing more than what exactly is Bitcoin as an asset moving with. Is it moving with gold? Is it moving with the dollar? Is it moving with the NASDAQ? Is it moving with avocados? What is it? Well, as of right now, the Bloomberg index has showed us, and we've known this for a while, that Bitcoin has been seen as a higher beta speculative asset class. Crypto at large has been seen as a speculative asset class. But there are obviously more uses to crypto, especially Bitcoin, more than just speculation. We all know that in the crypto space. But those outside of crypto, especially the bigger funds and institutions, don't really see that don't see that the same way that we do. The way they see Bitcoin is it's just a higher, riskier, more volatile stock market. That's all they see it as. And when it goes up tremendously. And when it goes down tremendously. Okay. So over the last few months, what we've recorded is the correlation between the NASDAQ, which is basically a tech or growth heavy index, and Bitcoin. The correlation has been increasingly getting higher. So this correlation tells us that however the NASDAQ moves, which is generally the tech and growth stocks, like I said, is pretty much the same path that you can expect Bitcoin and most of crypto to move. Now, the reason I say this chart only shows Bitcoin, so I'm going to show you all another chart, which is Bitcoin's internal correlation with other cryptos. So here's a correlation matrix that helps you visualize of how other assets within crypto, like Ethereum, Solana, Luna, Curve Finance, AVAX, Rune, the major players in the market, right? How did they move with Bitcoin? Well, in terms of correlations, one thing that you have to know is that anything in the green right here, okay, especially above 0.5, 0.6, that's a pretty strong correlation with Bitcoin, meaning when Bitcoin goes up by 1 or 2%, more than likely, most of these assets are going to go up about the same, okay? Sometimes the percentages might vary, but the direction is pretty much intact. They're like shadows of each other. So what you see across the matrix is it's all green. It's all green because what you effectively have is the NASDAQ, which is the larger father of how Bitcoin moves. And Bitcoin is the father of all these child altcoins, okay? And these children of Bitcoin are all moving with it in the same way Bitcoin, being a child of NASDAQ, is moving with it. So what we really need to know is how exactly is NASDAQ moving, especially over the last few months? And the ES, which is similar to NASDAQ, S&P 500 index, has, as you can see, been very choppy for most of the year. Basically, since the beginning of the year, it's really just been going sideways, right? Down a little bit, popped a little bit, came down again. But more or less, we can identify this as a sideways movement. And in this sideways movement, this has effectively been the same chart as what we've seen in Bitcoin as well. Since basically the beginning of the year, we've had a pretty sharp drawdown, but from the beginning of the year down here, we've kind of just been going sideways. Now, this chart right here, what it doesn't show you is that over the last few months, as the stock market itself, individual stocks inside the stock market, for example, AMD or NVIDIA or Google, Tesla, Microsoft, any of these, Bitcoin has actually been performing relatively well in terms of this sideways movement. Yes, preceding to that, a few months, we were going down aggressively, but once we came down to a certain level, Bitcoin found a better floor right here than most other stocks. And this is actually a good sign. And this is where I start getting into the idea of why I'm bullish for the next few months, especially Q2, right? Q2 ends in end of June. April, for the most part, has been pretty shitty, right? We started off April, end of March right here, and then April has just been down only, okay? But I don't think that we're just going to keep heading down further and further. It's possible, but I think the probabilities are low. I think from here, we're probably going to base out. It is very probable that maybe we go down here and sweep 37,000 because there's so many points of, liquidity and engagement left behind right here. And we could take all the stops right here, generate a lot of volume, get a lot of people interested in buying and selling down here. And then we start shooting back up. I think that's a pretty high probability that we can do that, but it's not necessary. What I do feel is necessary is that at some point, I expect prices to get back to 48,000, 52, and maybe as high as 58. Okay. And I believe that that time will probably happen sometime in Q2. Now, going back once again to the stock market, all right, because remember, that is the guiding force for crypto. What guides the stock market is also, like I stated, the bond yields as well as the dollar. I'm not going to go into why exactly bond yields and the dollar are impacting the stock market, but I'm going to give you a simple correlation. Today's discussion, if you're going to take anything away, is just correlations, okay? When the dollar starts going up, as you can see, DXY is a ticker for the dollar, is basically a basket of dollar-based currencies. And when you see bond yields like this trending higher, you can almost always expect the US equity markets to either range or start trending down. So dollar up, yield, 10-year yields up equals US equity markets either going sideways or breaking down. And when US equity markets, especially the S&P 500 index or the NASDAQ index, start to break down, you can expect Bitcoin to start breaking down and showing weakness. And when Bitcoin starts to show weakness, guess what? All things correlated to Bitcoin, which is these altcoins, they also start to show weakness. So one of the ways to visualize exactly what altcoin weakness looks like is total to market cap. As you can see right here, total to market cap shows altcoin market cap only, excluding Bitcoin's market cap. And you can kind of see for the last several months, basically since November 2021, the market has been trending down. Yes, we broke out of this channel, but nonetheless, we've still been just grinding lower and lower. This is definitely concerning, okay? Another way you can look at this is, say, DeFi. They have a DeFi perp, I think, on FTX. This is another way where you can look at DeFi only basket, right? How has DeFi only basket been doing since basically last year? Not so good, right? This is how the DeFi only basket has been doing right here. Huge range. One can maybe even draw out somewhat of a, descending triangle like this. So maybe you go, something like that, right? A descending triangle. Sorry for my awful drawing, but point is that descending triangles, especially like this, it's basically like the bouncy ball effect, which is that the support down here can only be hit so many times before it eventually cracks to the downside. Okay, so if we break this out a little bit further, this is what the whole market in DeFi looks like. Okay, some worse than this chart, some slightly better. But for the most part, on average, this chart right here is a clear representation of what's been happening in the DeFi front of most altcoins. And it's not a pretty look, as you can see. So this chart is a pure representation of how Bitcoin has been impacting the altcoin market. And by the way, the DeFi market is doing a lot better than other markets within crypto. For example, the gaming side of things, the L2 side of things, or 2017 altcoins, which look significantly worse, right? So, or meme coins like Doge or Shiba Inu, okay? So this is actually one of the better charts that you'll see in crypto altcoins, and it still looks like shit. So the point is that I've now given you a top-down understanding of how Bitcoin is being guided by the stock market and how the stock market is being guided by the macro forces of bond yields as well as the dollar. So how does this all relate to where we are today? Well, I wrote up a thread at the beginning of the year talking about my investing checklist for crypto and what we need to be looking for in the market to either be risk on or risk off, to either be cautious or optimistic in the market. And over the last few months, things have changed quite aggressively. One thing that has become abundantly clear is that the Fed here in the US has gone into a route of wanting to quantitative tighten. What that means is basically they're not going into the market and buying bonds. They're not going to buy bond ETFs like they did in 2020 and 2021. In fact, they're probably going to start shrinking their balance sheet and not buy as much, and quite possibly at some point start selling some of their bulk of what they've bought. That's one reason why the market itself is trying to digest all the things that the Fed is doing. Number two, interest rate hikes, right? Obviously, everybody knows this has been happening, and unless you're living under a rock, this has been going on for the last few months, okay? Why is the interest rate hike also important for crypto? Once again, this goes back to the overall correlations of US equity markets being guided by the macro forces such as the dollar, such as the bond yields, and how that also entirely affects Bitcoin. When interest rates start to trend higher, it effectively means that the money is becoming more expensive. And money becoming more expensive means that corporations, bigger funds, bigger institutions are going to be risk averse. They may not want to take as much risk in the US equity markets because the money itself is going to tighten up. It's going to go into more wiser places than it did in 2020 and 2021 because money was far more abundant back then and liquidity was flush in the market. Now, liquidity is basically being pulled from the market, and it will likely head into places where it will seek security. Where will money seek security? Probably the bond market, probably the dollar, which once again, it's been going up, and probably just, I don't know, maybe value stocks, or, most people just picking up resources or commodities like gold or oil, because gold or oil have been sort of these inflation hedges, and they are possibly a resource that you want to grab, especially in a time of uncertainty. It's not going to be Bitcoin for now, because once again, we saw the correlations for Bitcoin are trending with tech and growth stocks. So it doesn't quite give investors the confidence that in a risk-off environment where people are going to start selling and seeking security or seeking yield, they're not going to get that kind of yield in crypto, and they're not going to get it in Bitcoin, especially because Bitcoin is going to go down at a higher percentage than, say, the NASDAQ or most stocks will. And that's not what investors will be looking for. So the point is, right now, what you want to be focusing on is the larger game at hand, which is the correlations, the top-down strategy of dollar going up, the bond yields going up, and how that impacts the indexes and how the indexes impact Bitcoin because of its strong correlation with the tech and growth stocks, and how Bitcoin itself impacts altcoins. That's the whole game right now. Now, there's a slight caveat to this, and this is where things get really interesting. Now, I believe in the near term that, as I stated before, at some point in Q2, I'm still expecting a big up move in the market. And part of that could either be driven by macro, because I believe that bond yields are very, very extended. I think the dollar has broken out in a pretty massive way. If we actually look at the dollar on a monthly chart, it just looks like it's starting to break out of this massive, almost multi-year wedge. And this is definitely not a good thing. But I actually think that this is going to take a few months. And in fact, it might actually even take maybe till the end of the year. And so for that to happen, I'm expecting the dollar to go sideways, maybe trend down a little bit for the next few months, which would give relief and a reprieve for crypto assets. Because remember, like I said, dollar going up, bond yields going up equals tech stocks and growth stocks going down, and Bitcoin and crypto going down. But if the dollar starts trending sideways or going down and bond yields start cooling off a little bit, that money might quickly rotate into Bitcoin and US equities, which would mean Bitcoin and US equities start trading up. And that is where we get our relief rally. And that is exactly the whole magic that you want to be a part of right now, which is that, are we in this overextension near term for the dollar and the bond market? And if so, how do you play it? Well, I think the best way to play it is recognizing, is this where we are right now in terms of the fear and greed index, in terms of flows in the market, in terms of support and resistance levels, volumes, and other metrics that people look at? And I believe that's exactly where we are. And this is why I'm actually net long in the market. I don't really have big levered positions because I'm just hanging on to spot positions, especially in good quality assets. I'm not picking up Doge or Shiba Inu or any of the 2017 altcoins. I'm picking good assets that I actually believe are going to be worth hanging on to whenever we get that big pop in the market. And if and when we do, I'm not going to be holding my breath for a new bull run. I'm only going to be playing it for level to level and looking to get out in profit. And at the point where I start to recognize that the market has popped up in a good way, and we see that almost everybody has gotten bullish right into resistance levels, whether that be 52K or 58K. And for altcoins, I don't know where that would be, right? For, say, Ethereum, I don't know where a bullish level might be, whether that's 3,500 or 4,000 or 5,000. I don't know how high Ethereum can go until almost the entire market gets really bullish on Ethereum. Okay, but point is, at that particular point, I'm going to want to start unloading and taking profits on my positions. So I'm laying out my game plan to you to help you understand how I go about mapping out my strategy a few weeks or a few months in advance. And it helps us identify this stuff because at least you're not unprepared. When you see big whipsaws in the market, hopefully you're not panicking in and out of your positions. Hopefully you're not over levered. Hopefully you don't have to worry about liquidations or anything as such. And this is, one thing again that we teach in our community, which is how do we look at the market on a day-to-day basis. And this is, our private Discord community. And you can go to our website, thealphatrades.com, click the products page right there, and go sign up for our Advantage membership if you want to learn how we trade in the market every single day, like the video you're seeing now. Okay. Make sure you all hit the thumbs up, by the way, if you like this content. So the overall game plan, like I said, is make sure you pay attention to what exactly is guiding the market. Don't forget about the correlations that we have, and pay attention to good quality assets. Ethereum, in my opinion, is a top tier asset that you should definitely be watching. AVAX is at the top of my list. NEAR is at the top of my list. Luna is at the top of my list. And Solana is at the top of my list. There's other assets that I definitely watch. Maple Finance, which I've talked to my Advantage members about multiple times. I actually entered a position here around $23. We're up, more than 100% since then. It's been about a month and a half. Other assets I still believe that you should be looking at and paying attention to, FTT, which I know it popped up yesterday, but it started to break down today. Still, again, you want to pay attention to FTT, not because you want to look for the big pops, but FTT is an exchange token. And exchange tokens are often the ones that can give you an understanding of what is happening beneath the surface of the market. And what I mean by that is FTT token and the volumes that are occurring on FTT. So if you actually go to coinalyze.net, you can see volumes of exchanges right here. And when you start to see volumes start to build up and open interest right here start to build up, this is really the time you need to recognize when the market is starting to get into a more risk-on mode. And as of right now, I don't quite see that, but I can slowly see signs where things are building. Momentum is trying to build. And you can kind of see that through the day-to-day movement of volume. You can't see that, on a multi-month scale. You can't see that in open interest on a multi-month scale, but you can see it on a daily basis. And you can especially see it in terms of spot volumes. Spot volumes is the actual buying of the asset. And you can also see it in CVD delta, which is the cumulative volume delta. So you can click here. You can go add this indicator right here, and you can type in CVD. Let me see here. Might have to go to a different website like Trading Light. So Trading Light gives you the CVD delta on pretty much all altcoins or even Bitcoin. So this CVD delta right here is for Luna. Okay, so Luna, and remember this is futures, so that means that this is not spot. Futures contracts are telling you right now that, hey, there's some decent amount of selling that happened right here. Okay, and that implies that basically there's a lot of sell pressure happening in the market. But what you want to ideally see is, for example, let's see. So say something like NEAR. Okay, I'm going to show you all something interesting about NEAR. So if we go to Binance and we go to NEAR, all right. So this is a contract for NEAR, but this is not futures. This is spot. And if you look at NEAR for the last few weeks, as the market has been even trending sideways, well, what do you see right here? CVD is trending up. Okay, so spot CVD, meaning cumulative volume delta, meaning buying over selling, has actually been trending up. So that means there's quite possibly accumulation happening in this particular area of actual buying of NEAR. And this is a very good sign, because what this shows you is traders are still willing to step up in this market because they believe that NEAR is the asset that they should be accumulating. So this is actually a very, very good sign that you want to see it. So what you want to do homework on is finding more and more assets like this that are showing, CVD delta accumulation on spot contracts, and then slowly building up CVD delta on futures contracts as well. Okay, so that's a pro tip for you. Make sure y'all do your work, do your homework. Obviously, that's not financial advice to go long or short, but just giving y'all a tip, okay? So overall, be cautious in the market. Yes, there are hedges that you could put on. I think a simple hedge, if you feel like the market is going to break down further, I think a simple hedge is very, clear right now, which is that you go short now, you place your stop about 2 or 3% higher, and you take your take profit right into the liquidity that I pointed out earlier, which is around $37,000, which is all these points where stops are sitting below. It's as simple as that, okay? But the plus side of this is that even if prices do break down, the better trade here is look to see if prices bounce from here. This is your long opportunity, a very clear and defined higher low stop right there around 34,300. And then you take this trade back to 40K, 42K, 45, 47K and all the way up into 50K, right? That could be the big trade that you want to be looking at, okay? Because the best trades are the ones where, almost no one is expecting something to, quickly reverse back out and start trending the other way. If people panic right here and they're stuck in their short positions or they sold and then the market quickly reverses and starts trending back up, well, then almost everybody will get squeezed out and they will have to chase prices higher and higher and higher. Okay, that's the ideal situation that you want to be long in. And that's what I'll be paying attention to. All right, that's about it. I hope y'all like the alpha that I dropped today. I hope you enjoy the information and the free content that I provide. Please do hit the thumbs up. It really does help our community. And like I said, make sure y'all check out thealphatrades.com, hit the products page, and join our Advantage membership, or follow me on Twitter, or there's a link for our free Discord community in the top right of the YouTube video right now that you're seeing, or in the bottom description of the YouTube video. So come join our channel, come hang out with us, talk NFTs, talk altcoins with us, and we can go from there. All right, y'all take care. Good luck, everybody, in the coming week ahead. I will be discussing more points, what I see in the market in our private community. So until then, good luck, take care, cheers, talk soon.